What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for SoFi Technologies with the ticker symbol SOFI. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So this is going to be another market analysis for SoFi Technologies. I look at SoFi every Tuesday and Friday, so that's twice a week. So let's take a look at what happened since last Tuesday. You can see these are the same drawings that I had before. So it looks like price did get rejected from the 909 level, but it did not continue down lower because there is this yellow uptrend in play. So we can go ahead and remove this measure move target as of right now until we see strong aggressive selling towards the downside. And then this measure move target most likely can come back into play. As of right now, it's just one impulse down. So right now we need to be focusing on this uptrend. So since there's not a strong clear direction on where price is headed, I will have to look at both the bearish and bullish cases. So in this case, since we do have this uptrend in play, we could continue trending up in this uptrend, something like that. Because price is working its way higher, and this is a confirmed accurate uptrend channel because we have multiple touches on the bottom of the channel and multiple touches on the top. So this is a confirmed uptrend. So that is one possibility. If we start seeing a huge move up, I want to see this $9 level act as support for higher prices. Now let's take a look at the bearish case. Let's say we don't continue working this uptrend and we don't find support if we do break above the $9 level. We can always break above the $9 level and fail immediately. So that would be a bearish case right there, especially because we see two legs up already. So this is one leg up, price pulled back. This is the second leg up. A lot of times after that correction or pattern occurs, that's when the next impulse can begin. And what was the previous impulse? This one right over here. So it's the second leg down can form around this area unless I see a strong amount of strength by the bulls. As right now, I'm not really seeing it. This is a fairly weak channel, the way price is inclining. So I would need to see a shift in momentum by the bulls. As right now, it's leaning more towards the downside because we do have two legs up and we're still below the $9 level for 4 consecutive days in a row. So there is some resistance there. So it's leaning slightly more towards the bear case, meaning towards the downside, probably back down to the $8 level, or at least in the short term, the lower side of this bullish channel. And if the bullish case does occur, which is possibly still can, then I want to see a break above the $9 level and then continue to hold as support. So that's how I'm looking at SoFi. I don't have a strong direction as right now. If I start seeing price drop, then I can move the measure move over and say, okay, there's a good chance that the bears are trying to make another impulse down. Until then, I can't have a accurate second leg formation until that occurs. So as right now, price is bullish in the very short term, meaning the past couple of weeks. But that looks like it's coming to an end because we're getting rejected from the $9 level, and we already have seen the bulls make two legs up, which is a corrective pattern for continuation to the downside. So that's how I'm looking at SoFi. It can do a few things, obviously. Generally, if price is in a area where it can normally do one thing, which is when a price is overextended, it will most likely come back down. In this case, there's a couple of things that can occur because I don't see a trap in the market. If I see a trap in the market or a setup, something like that, then I can have a better idea what the market's trying to do. As of right now, it's not really setting up to do anything. It's just moving up slightly. And since it's still below the $9 level and the measuring target is practically met, there's a higher likelihood the bearish scenario plays out, which is towards the downside. Maybe to the $8 level. I think at least in the short term, maybe to the 867. And then from there, is it going to hold as support, or are we going to see another breakdown lower? So again, as long as price is below the $9 level, there's always a high likelihood for more downside in the future. If price does break it, I want to see it start holding as support. So that's how I'm looking at SoFi. It hasn't really done much since last week, Tuesday. You can see that price is closing right around the same level as analyzed in the past. So here's a quick take on the weekly chart. Overall, price is still above the EMA, which is a good sign for the bulls. So again, it can break above that $9 level. I'm not saying it won't. I'm saying it can. That's why I'm looking at both the bullish and bearish cases. However, I'm saying that since we had two legs up, there's a good chance we can see the sell-off occur. Now, if we don't do that, then that means it never triggered. It was not, even though it was anticipated to occur, it never triggered. And in that case, the bullish scenario might have more weight in the market and play out further. So that's how I'm looking at SoFi. Overall, on the daily and weekly charts, weekly chart is showing bullish price action because price is above the EMA and still practically above the $8 level, which is a good sign. In the short term, we are seeing a nice little uptrend form. I'm just looking at signs of weakness because we have 2 legs up by the bulls, and also price is still below that $9 level. So and it's critical that the bulls get above it if it wants to have a sustained uptrend. As of right now, that's all I have for SoFi Technologies. This is Vee Trades, and thank you for your time.